Hello, 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 everyone. Good morning. Good morning. What is it? Happy Wednesday already. 2 weeks to Fed rate hike day. Exactly. There we go. 2 weeks to go. So how is everyone doing? PPI numbers huge miss. Retail sales big miss. Copper hitting targets. Crude could trigger another pattern. Wow. But equities, ugh, ugh. Patrick, good morning. Good morning, Josh. Jacob, good morning. Hey, Charles, good afternoon. Let me get the clicks going. Morning, John. I think that's a good idea. George, sitting another day out. If you just trade the equities, unless we get out of this range, it could be just a chop fest. Good afternoon, Eric. Grand Rising, Christoph. Howdy, Happy Jack. Tesla's been running, which means there'll probably be more news to drop. Morning, Christo. Good morning, Options 22. Donald and Ted and people hiding in the background. They've been on $39.99 for a while. I guess you mean the S&P. Hold on. Uh-oh. Uh-oh. What do we have here? I think Bob is going to make a surprise appearance. Hold on. Good morning, Martinez. Good morning. What do you mean GM question mark? Good morning, Royal Palms. Good morning. So, I think Bob's here. Let's just bring Bob on. We didn't get Bob yesterday afternoon. We didn't get our fix of the Bob. Hey Bob, does your new place not have a brick wall?
I could put up a brick wall if we want it.
I mean,
I'm using the brick wall right now to block the windows because the windows don't have any blinds in them.
who needs blinds these days?
I've got all kinds of artificial lighting here because I've got an open window over there just blasting the sun at my face. Um, yeah, so I think the internet's sorted. I don't know. Xfinity might be the worst company on the planet.
They're up there. They're up there. See, look, your fans are all here. Ted, Bob. That's the
What's up,
sound of
Ted?
Bob.
What's up, guys?
So what's going on? But we had the Bank of Japan. We had retail sales. We had PPI. What's going
Yeah,
on in the
so
world?
the two things I want to talk about more than anything is the Bank of Japan did not surprise me as a strategist, but surprised me as an amateur economist because they really need to stop what they're doing. The consequences for the economy, which they've been spending the last, I don't know, Mike, what would you say, 25, 30 years trying to get inflation up?
Yeah.
Well, they've got it. And now they just keep pouring yen into the market with these unannounced purchases. The market, again, is pushing the upper band of their allowable yield on the JGB, just like they did when it was 25 basis points. Now it's 50, and the market just keeps bumping up against that 50 over the last few days.
Oh yeah.
Just keep doing these unannounced purchases to keep it below there. So it's just nasty, nasty, nasty price action there. And it's interesting because the yen has these occasional spikes, which are kind of funny because the market keeps thinking that the BOJ is going to back off. And then the BOJ doubles down. So really awful situation with the Japanese economy, but Kuroda is going to be out soon. And I think that might be the time. I think this was his last meeting. And that might be the time where they kind of let it fly a little bit, but we'll see. So again, not surprised, but surprised. Retail sales struck me quite a bit. Retail sales in the US was way worse than expected. And when you looked at the metrics of it, there was really no way to explain. I mean, gasoline was down. Remember that retail sales is not inflation adjusted, right? So gasoline prices were down. So gasoline spending was down. Food prices were flat. So food spending was flat. It's almost like the whole thing goes along the lines of inflation, at least on those two metrics. But department store sales for the month of December, we all know what's in December, right? Department store sales were down. Online sales were down. And that all jives with consumer debt hitting a record high. So when you put all those things together, it's very easy to kind of extrapolate out what might be happening here as consumers are now under pressure in a big, big way. With interest rates higher, their credit card debt and their overall debt higher, at a record level, they're not spending. They're stopping their spending. So that will, again, this plays into the narrative of the end of the first quarter, beginning of the second quarter. I'll lean more toward the beginning of the second quarter when these kinds of things start to play into earnings and that possibly hitting the equity markets. But stocks are behaving, I think, like they should right now with the way that the twos tens is steepening. Right, I saw it at 65 or 63 this morning. It was 73 2 or 3 days ago. Inflation is likely going to be self-taming a little bit on the goods side, but the services side of things are still up. Goods are just collapsing, but the consumers moved away from goods. Refrigerators have all been bought. TVs have all been bought. And if you look at retail sales, it backs that. It backs that consumers are moving away from goods. They're moving into services, and services inflation is still higher. So that's what I wanted to share with you guys.
Okay. Well, there you go. So your internet, we have no problems so far. It seems to be working.
Please don't say that.
It's
It was a nightmare, dude. It was a nightmare. I mean, it just kept going in and out. I'm on with the online chat, which is the first thing they make you do. Then I'm on with the live chat agent, which is the second thing they make you do. And then the live chat agent said, "Is it blinking right now?" Yeah, it's blinking green. Now it's blinking orange. Now it's solid green. Now it's solid white. Now it's blinking green again. And I'm typing this real time. And she is like, "Thank you for to be helping as a team player." I'm like, oh my God, I can't. I just can't with this. So
yep.
they were going to overnight me a modem, and they said it would be there either tonight. This was 2 days ago, either tonight or tomorrow morning. Never showed up. I got a tracking code from UPS all day, all night. The first night, there wasn't even a tracking assigned to it. The next day, label created. That was the only thing throughout the day. I just checked that one this morning. It's going to arrive on the 18th, which is today. And then in the second chat person yesterday is sending me another modem overnight, which isn't here yet.
Well, there you go. You're gonna be
I'm
rolling
just,
in Comcast modems.
but they
Uh,
gave me a free streaming service called Xfinity Flex, which they said, we're giving you this for a lifetime. It's free. Like, you're just giving it to me for free? No, it's free for everybody. Okay, that's great. There's more. There's more.
uh,
But I needed a credit on my bill and I got some. So,
all right, Ted. Is it truly a stop in spending, or did everyone buy for Christmas in September when there was a fear of supply chain issues for Christmas?
well, Ted, I would say you're probably not wrong about that, but either way, it's a stop in spending. I'm just lining that up with consumer debt levels. So if they spent in September, which I believe there was some data to show that, so I'm not disagreeing with you at all. But now they have record levels of consumer debt, and, and all of that debt being at higher interest rates. So yeah, also a part of that, Ted, to your point, is that prices on goods have gone down. But the number was way worse than expected. Analysts are pretty good at pricing in um, the lowered prices for those goods. So I think you're correct. It is truly a stop in spending, and part of that is because of the early spending. But you would expect to see it at least be a little bit stronger over Christmas because no matter what, there's a huge sector of the public, men, that don't think about it in September. They start shopping on like the 23rd. So that's only the Mike Arnolds of the world pre-plan.
What do you mean by that?
Mike probably buys Christmas presents in January when they're on
No, it's
sale. That's just
February 1st kicks off my holiday buying season.
there you go.
Got to take the month of January off. All right. Okay, Bob. So we can count on you again tomorrow afternoon, right?
Yes, as long as the internet's up. And quick comment on the two posts Sterling just made about yields there. Yields fell dramatically after the retail sales number, which tells you that the bond market also believes that the consumer is somewhat collapsing. So Ted resembles that 23rd comment. There you go. So
All
anyway,
right.
yeah, I'll be here tomorrow, guys. As long as the internet's working, I'll be here.
All right, perfect. We'll see you then.
All right. See you
Thanks.
guys.
All right, you're stuck back with me. We already covered PPI, Retail Sales Bank of Japan. We got Bostic speaking. Actually, it looks like industrial production is coming out in 1 minute. We got Bostic. We got Bullard. We got Harker. We got the Fed's beige book. There we got industrial production just came out. Looks like down from previous. Capacity utilization down a bit. So manufacturing production month over month down. So 3 downs there. What else? Then we got Logan after the close. Let's get through stuff. The market still looks like it's could be in bounce rally mode. Watching for take out yesterday's highs. Sectors, everything pretty much green. Financial was lagging when I refreshed that earlier. Fed watch tool still 93% for the 25 basis points. So that's baked in and still solidly in green mode. Other stuff, remember, on a continued rally, the gamma flip area is about 4,015. Where are we right now? We are at 4,027, so we're technically in positive gamma. And as it accelerates, positive gamma really starts peaking around 4,100. So that's the key area to keep an eye on. Remember, positive gamma selling into the rallies. Where else do we sit in terms of earnings? Just recapping stuff. There was Schwab and PNC, but not much else. After the close, we got Alcoa, Discover, and then some regional banks. So more a quiet earnings day today. Watching for a break of yesterday's high would be a 1 bar pausing pattern. Yes, things are very overextended with cycles at the top, so it would be with tighter stops. I have the new levels marked off for the little bigger term. Targets, if we break above 4,035, remember the 62.5, which has not been able to close above, is 4,033. Targets, my targets, the upside are 4,052, 4,066, 4,082, and then 4,095 if you want to take the notes down. My major support, if we do break down below this 39.98, 39.97 area, first key area of support is about 39.80 to 39.83. So that's what I will be using. Then about 39.70. And then all the way back down to 39.41. The NASDAQ just keeps chugging along, taking out the next harmonics. Key current area is 11,743. 11,743. And then above there, I need to get a pausing area first. But the next major level is 11,942, but I'm watching 11,743 on a closing basis. Remember, we're still overbought cycles at the top. The Dow, which had a decent sell-off, did not actually close below the prior day's low yesterday, so not an outside key reversal day, but catching on so far on the little rotation zone. Other than that, if we do break down, my key support is 33,780 area on a rally back up. This is what. Could you try again? No, I won't, Siri. I don't know why you think I'm talking to you. Key areas I'm watching on the way up: 34,200, 34,275, and 34,275 on a closing 4-hour basis. The Russell, really watching this closely. Gonna bump these up a bit. If we take out yesterday's high, then remember we did close above the 62.5 2 days ago. Minor target is 1915. Major target area is 1935. Let's get to spiders. The spiders, little pre-mark, by the way, this is off the table. The little potential double that never triggered. Key area, or besides the potential gap, the gap fill play. The gap fill play, which would be to yesterday's close, should we roll over into the open, would be 397.77. 401.56 is the next target up there on the spiders. Major support coming in down about 393. On the Qs. The Qs, again, it would be, let me zoom in here. We have a very key level, this 282.95 on the closing basis. If we roll over, it would be the gap fill play to 281.54. We start closing above 280, 282.95 for the day. My next target to the upside, I'm focusing on 286.50 with the gap fill, and then 287.59. Besides the gap fill, the next key support area is about 280.60, and then major supports all the way back at 276.40. The DAX, just trying to put in a possible rounded top, but this is where we're not even getting decent pausing bars yet. Next major target I'll be using is about 15.5 and then 15.7. Notes. Looks like we're going to be, this is still a potential little minor double. It's the only thing, but it's a far way off of triggering, especially with this rally after retail sales. Tagging the harmonics, I'm watching more significantly. Remember, between these red lines could be setting up for a significant rollover pattern in the next couple weeks. But on the continued rally, 116 and then 116.07. Support now back at 115.13, 115.14. Dollar index, once this data came out, it looked like we're going to run with the little inverse head and shoulders, and then the dollar index tanking down. So that is done. A stop right there. 101.13. And then the next major support is until 116, so 100 area. So pull those off for now. Where else do we sit? Crude. This will be important for the daily close above 81.50. By the way, the little potential double, which never triggered or confirmed, is off the table. Minor levels on a continued intraday rally, 82.57, 83.96. If this does triggers a double bottom pattern, which the full target could be a return to the 200. Simple moving average, 92.92 area. I will be watching for a pullback play, though. Copper, I want to touch on that. Hitting the levels. Going to keep watching on the closing basis. If we close above 432.40, could be a continued run higher. Next key level is 456.25, but the double pattern is all done. Copper got there after basing sideways for a while, taking out second and third targets relatively quickly. As we talked about the JGBs, Japanese government bonds, back off from the 50% target, but I expect a spike back up there, and we're going to have to be more intervention. You see here, Bank of Japan triggered a little spike into the rotation zone, and then the rapid collapse back down. Little spike, rapid collapse back down. So this is completely valid area. If we break the lows back from the 16th, Monday the 16th, to use your reverse harmonics. 126.65, 126.13 in the short term. Euro with the dollar moving down, euro moving back up. Euro moving back up. This is not a double top, though. There's no double, but key support that I'm watching for is back at 107.80. The next key target area I am focused on is this 50% level we've talked about multiple times, 109.42. Nothing with the pound besides a potential double top pattern, but the next level, if we do break higher, I have to raise these to use the longer term pausing bar. And this is also good if you're trading the pound, another good area to use your reverse harmonics. So you have the two major levels, 125.98, 127.04, and then 127.91. The old Bitcoin continued to hold up. Your key support now, which is trading just above, is about 21,300. Let's get to Tesla, which another gap up this morning. Again, my key target area is right around the 140 to 141. 137 is, we're trading 137.13 on the open. 137.75 is going to be for at least a stop raise, then 140 to 141. If on a rollover, it would be for the gap fill play back at 131.49. Is it going to be a good year for stocks? Not yet. This is just a short-term tactical rally. We got to get some stuff out of the way, and then we'll watch for a more significant bottoming pattern. I know it was brought up with the 10-2s earlier. And still, we don't have this little mini double. Little steepening, but, this isn't major for me yet. If we get the 10-2s to close back above, minus 6.8 basis points, then we could get the steepening to right around minus 52. But other than that, that's really what I'm keeping an eye on, because they're both pulling back in terms of yield right now, the 2s and the 10s. All right. There we go. PNC gapping down about 7, so I guess they missed. I guess they missed or gave bad guidance. It doesn't say what it was here, but I know they had earnings. Oh, wow. That is a monster gap down. Whew. Be watching this 147.50 area. All right. Biden Department of Energy said they were going to wait when oil was at their $70 barrel price because they thought it would go lower. They should watch this channel. Well, they're going to have to wait a little longer at this point, aren't they? I don't think they want to refill it. So we'll just leave it at that. I'll be back after the close today for more market analysis. Talk to everyone later. Bye for now.